Good evening, everybody. Thank you all for being here. Look at the regulars, Raven, PB. What is going on in the streets? Thank you, everybody, for being here. As you can see, I'm trying to channel my inner Kris Patel. Not sure where he is at the moment. Should be here soon. Please do me a favor. Take a moment and read the disclaimer. I am not a financial advisor. I have no idea what your situation is. Please do your own due diligence. Please do not make any decisions based on somebody on the internet. Do your own due diligence, make good decisions. Thank you very much. So hopefully everybody had a good day today. Market rebounded a little bit, even though oil is still up. Had a big day in tech. And we got Kris here. What's going on, Kris?
Nothing much, man. I had some trouble with my Wi-Fi. I just had to restart the computer real quick.
No worries. No worries. Well, I got the disclaimer out of the way. I'm channeling my inner Patel with my hat. I just can't pull off a backwards one.
Okay.
So you want to get right into it? You want to talk about tech real quick? Because today was a nice rebound day.
Yeah, let's get the tech thing out of the way. Put me on the other side, and then we'll get started.
Ray, what's going on? June, what's going on? Ray, looking forward to next week. June, looking forward to next week. All right, so today we had a big rally in tech. We had Adobe up $2.50. We had Amazon up $4. Broadcom up almost $3. Salesforce up $5.50, almost 3%. CoreWeave was up almost 6%. We had Meta up $14, over 2%. Microsoft rallied for 40. Nebius, huge deal with Meta, up almost $17. Tanner was right. You heard it. Tanner was right yesterday. Nvidia up a little bit. I think more people would have thought it would have been up more. Looks like it's fallen a little bit after hours. Oracle up a little bit. And that's about it. Tesla up a little bit. So what stood out to you today, Kris?
A couple of things. Number one, the market is definitely being impacted by all the stuff that's happening in Iran. You know, like as the situation over there clears, or at least the news that things are clearing over there could see a retracement for a lot of companies. And, you know, like the cruise lines were up almost 5% today. So oil was down 5%, everything else, you know, and the cruise lines rallied 5%. Now, the key here is that cruise lines are directly impacted by higher oil prices. So that makes 100% total sense. The rest of the market, on the other hand, is impacted by the fear of stagflation dissipating, right? So if we end up getting $150 oil, you know, we've got inflation back again, right? And then we've also got joblessness, lower growth this year, supposedly. So all of those things add to stagflation, which means that multiples on the general market would compress. And so especially tech had a couple of rate cuts that were kind of priced into their prices. And so by taking that away, you basically had the market, you know, going into a little bit of fear. So the more we are likely to see this whole Iran thing, you know, blow over and oil prices come back down to somewhat manageable levels in the 60s and 70s, you know, and I don't think it's going to come back to the 60s and 70s within the next 2 months. It's probably going to be closer to 6 to 9 months, but it's much better than $150 barrel, you know. So marginally, we are still in a place where inflation is not going down. On the other hand, the economy is starting to weaken slightly, right? So you see jobless numbers are higher and all of those things. So usually you want to fix that by lowering interest rates, in which case now it becomes a little bit better for businesses to get some capital to reinvest, and then you could have some pickup in hiring. But but if you have inflation, then the Fed is not likely to cut anytime soon. And even if we get a dovish Fed governor, I don't think that they would be okay with cutting if we have plus 3.5% inflation. I mean, it's just we'd be in a really bad place. So I think the rally today is basically a relief rally in that the escalation of this conflict is not going to be prolonged, or at least the messaging that's coming out of the White House seems to be trying to figure out either one of two things: either an off ramp for the U.S. to decouple its involvement, and number two, it could be at least getting the Strait of Hormuz open, in which case oil could restart, could start flowing again. There's been a lot of propaganda on both sides, so I don't even know who to really believe. I mean, I'm going to try to, of course, believe here in the U.S., right? So I'm a U.S. citizen, so I have to believe in my side. But the Iranians not being completely out of the game is a reality that we have to face, right? So when the president came out and said Iran is done, but you still see strikes every day, it's like, are they really done? I mean, the number of strikes like to the other Gulf countries have kind of come down significantly. So it's not like there hasn't been any impact on their ability to cast their shadow, but at the same time, when it comes to like the Strait of Hormuz and the tankers moving there, you don't need a lot to close that strait. A couple of tankers getting blown up is enough to basically make insurance rates pop, in which case now you're going to have a really tough time finding a crew that's willing to navigate through a strait with highly flammable contents aboard, right? So all of those things are kind of adding to the equation. Now, I'd like to think that the military option is enough to get the IRGC to back off, but it doesn't seem like it. And the problem that the Trump administration is running into now is that they went in by themselves, gung-ho with Israel, and now they want the world to kind of back them and say, hey, listen, look, the energy that you guys are getting is going to be, impacted negatively, and you're going to end up getting hurt by it. And the rest of the world, instead of saying, hey, listen, you're right, energy security is going to be a problem for us, they're kind of just saying, it's not really our problem. And they're just either they're stalling, or they're just flat out saying, no, we're not doing this with you. So
the number that I'm concerned about is not even here yet. We have the Fed meeting this week. I'm interested to see what they say, but the March consensus number is 2.4%, which is flat. The TE forecast for trading economics, they have it at 2.9%. And
wait, say that again. What is that? Those are the estimates?
The consensus estimate for March is 2.4%. And the reason it's flat is because this happened at the beginning of March, and those prices that we're seeing are not rippling through the economy yet. I'm worried about after the CPI report comes out in April, because it's a month backward looking, what the hell does the numbers look like? So on the consensus for the April numbers, because in April we get the March numbers. Now, Trading Economics has it at 2.9% for their forecast, and they've been under where everything has actually come in. So if we're going off of them, it's coming in higher than 2.9. I don't know where it's going to come in, but with oil elevated, and if it stays over 85 for several weeks, several really meaning 3 or 4 into that April print for March, we don't want to see that consensus for the next month skyrocket to 3.3, 3.5, that area, because then we have a very bad scenario for the next Fed chair coming in, and who knows what happens. And I'm going to take my information from the oil price. I'm not trying to play what's coming out of one side, what's coming out of the other side. I'm just going based off of what oil's doing. Oil's high means Nothing's solved yet.
Yeah. Well, I mean, the challenge here is the longer this gets drawn out, the more likely it is that we're running a deficit in the amount of barrels that are going to be required to replace that demand, right? So one of the things is the number of ships. They take time to get to their destinations, and then you have like, then they have like a pool of oil that they have that they refine, and then those refined products get to the consumers, right? So it's not as simple as, hey, the price of oil has gone up, yay, automatically everyone's running out of oil. Like, no, there's a supply chain, right? So depending on where you are in the world, some places have enough reserves to keep their economies going without that much of an impact. Like Japan, which is 100% reliant on outside sources for oil, they have about 8 months worth of reserve. So, they're like, even if this drags on for 8 months, it's not necessarily going to impact us. The problem that you run into is that the longer this drags on, the more likely it is that the forward curve starts to rise, right? That means that people are pretty much assuming that the deficit is just going to keep getting bigger, and that there's also chances of re-escalation in the future, right? So our bigger challenge right now is that right now there's a lot of companies that are looking at the current backwardation and saying, look, the front month oil is $90-$100 a barrel, but if this thing gets resolved by September, those barrels are $60 a barrel. The problem is, as the Trump administration says, hey, listen, we're going to keep this going on longer, a lot of those businesses that need oil in September, they're going to bid up those contracts. They're going to bid up the $60 contract to 70. And then people, their competitors are going to look at this and say, wait a second, now it's 70 all of a sudden. Do I want to risk paying $80-$90 a barrel if this thing isn't resolved? So they start bidding up the thing. And so what happens is the forward curve starts to get bid up. And as the forward curve starts to get bid up, that means that now the pressure is on for oil to stay higher for longer, in which case, everyone passes on their costs, and, it ends up being an inflationary. Now, one of the things that was very interesting is I was reading that Saudi Arabia is kind of telling the US, keep pummeling Iran, like, don't relent, probably for two reasons. One, Iran, oil, as it goes up, the Saudis, they make money. Now, normally
They want oil at 80 for their economy.
right, they want it at 100,
Well, yes.
Now Saudi is actually in a really good place because they have a pipeline that runs through their country where they actually have loading that can be done at the Red Sea. So they're not nearly as impacted as some of the other countries in the region are, right? So economically, some of the other ones have been doing a lot more shut-ins, so they're dealing with this. Now, the other thing is Saudi Arabia has also been dealing with a lot of the Houthis, right, with the proxies in Yemen. So if there is a way where Iran's regime gets collapsed, it actually benefits Saudi tremendously. So I think this is all a game of geopolitics at this point, where everyone is kind of vying for their own interests. I don't know where we're gonna end up with this. Unfortunately, like the way I'm looking at this, I think there's a pretty good chance if the US wants to resolve this completely, they're going to have to put boots on the ground, because the current government in Iran has just
What was it,
wait.
a thousand
Huh?
ton, 1,000 pounds of enriched uranium that they have underground or something like that?
Yeah, but I think more importantly, they have a iron grip on the populace. Like, I think the Trump administration originally concluded that they do a couple of airstrikes, they take out some leaders, and the people, like, within the country are going to rise up and cast the regime down. The problem is there are enough incumbent people out there that are in power that they have control over the security apparatus that keeps people in line, right? Like, from what I'm reading, because I can't 100% confirm or deny anything, there is a sense of opposition, like a growing opposition to the regime, and it has been fomenting for a long time. The problem is the people don't have enough resources militarily to take back their country. So at that point, you have all of these, militia groups, not militia groups. Like, I don't know if you've heard this, but the regime is also importing foreign mercenaries into the country that are more loyal to the Islamic Republic than they are to, like natural Persians or Iranians that are more local, that have been dealing with the Christ, that the ramifications of being under this regime. So it's a very weird situation now. Now you're starting to see airstrikes in Iraq as well. I don't know if you saw that. So all of this stuff is starting to get a little bit more it's starting to grow bigger than what the US had originally signed up for. Now the question is, will the Trump administration taco? And I don't know. Like, he's shown in the past that he's willing to, give up certain goals in order to, keep the momentum in the economy and everything else. I don't know if that's necessarily the case this time,
Yeah,
but
I mean, look, we don't know why they went in. We'll probably never know the actual reasons. So,
I mean, dude, don't say that. That's obvious. Like, Israel
but what's
wanted to go in.
obvious and what's actual are two different things.
No, it's okay.
We can say certain things. I mean, the reality is
No.
this
They
acted on.
This one is very, very very highly reported. The U.S. was negotiating with Iran for controlling their nuclear weapons grade uranium, right? Like nuclear uranium, right? They were in active negotiations with Oman. They were close to a deal. The Israelis said, no, we're not. We cannot allow this deal to happen, because basically Israel's thing is, this deal is basically on paper, okay? The Iranians were going to enrich uranium regardless whatever deal that they were going to sign. Like, there was no way in hell Iran is like, yeah, you know what? We're not going to pursue the bomb. Israel's like, listen, right now we've got the Trump administration, which is at least somewhat on our side. If we don't act right now and we don't convince Trump to go in, we may never get this chance again, in which case Iran might end up with enough weapon, with the bomb. And if they end up having the bomb, we got big problems in the future. Israel said, we're going to go in. They got enough people on the Trump administration to kind of agree with the situation, to say, look, right now is the time where we can, decapitate the head, and this will be a great thing. And I think enough people got into the Trump administration's head and said, this is going to be easy. And now that the war is on, they're finding out that it's not as easy as he had, originally been led to believe. That's what I think. That's what's been reported everywhere, right? The Omanis have said it. The Trump administration, they were even saying we got close to the breakthrough. Marco Rubio said the same thing, that, hey, we basically had to make a decision last minute. And this is the reason why we're in where we are. Do I agree with Israel that we don't want the Islamic Republic regime that's hell-bent on destroying America and Israel? Yes, 100% agree. The method on which you're going about it, debatable, And also, there was another thing to consider too, Stephen. There was a populist uprising in Iran in January, February, right? So that was a giant crackdown that they had on it, and like tens of thousands of people were killed. So there was this sense of, okay, we've got the moral high ground if we do attack right now, whereas we didn't have that moral high ground before, right? So right now, the way that the US is framing this, and the way that Israel is framing this, is that it's a war of liberation. But in my opinion, this is more of a war of nuclear prevention.
Once again, we don't have the information that they acted on. Everything you're saying makes complete sense. We'll see what happens.
I mean, at this point, I think there's multiple sides in the Trump administration kind of vying for different goals. Some people are saying we should cut this and make a deal, and we've degraded the Iranians enough to the point where we can get out of this with a quote unquote a win. I don't know if you could really consider it a win, but let's just say as a stalemate and say, look, we did what we needed to. We took care of most of the Iranians who are, at the top. There's another part that are saying, look, we'll never get this chance again. There's another part that's like on the more political and economic side saying, look, we can't handle this politically and economically right now. We don't have the backing of almost 80% of the country. Like, this is a very, very unpopular thing within the general US population. You got 50% of population, which are Democrats, which were never going to support this in the first place, right? But then you've also got this giant wing among the Republicans, the no war people, even people in even within the Republican Party that are saying no boots on the ground, Iran, we don't support this. So you can't fight this war with only a 20% approval rating. Like, it's just not going to happen. And then you've also got the complication later this year, which is you've got a midterms coming up. So you have to figure that out. I mean, the Republicans at this point, based on poly-market information, is they're going to get slaughtered on both the Senate and the House. And if the House and Senate both flip for the Democrats, then you got a major problem on your hands with.
I don't know if that's completely accurate. I mean, it's been a long-standing thing that we would step in if Iran attempted to get a nuclear weapon. I mean, look, Hillary Clinton said it. She would not hesitate to take military action if Iran attempts to get a nuclear weapon. Kamala Harris said the same thing. So I don't like to get political, but they both said the same exact thing. Now, we really don't know what the real reason was. The most likely outcome is nuclear, but nobody knows. We don't have the information that they had. But I think everybody is on the same page about Iran getting a nuke.
Yeah, I mean, the goal
and
is
if you're not on that page. I mean, I don't know, but it seems like everybody is on that page.
Yeah, no one wants Iran to get a nuke. Like, nobody. Like, there's no one on the U.S. side, especially because, I mean, when you have a country that says death to America, death to Israel, no one wants that, right? But here's the thing: no one also wants to get their hands dirty, right? It's one of those things where you've got everyone who complains about the drug dealer on the corner, but no one wants to call the cops. No one wants to be the cop. But it's like, oh my God, our communities are filled with drugs. Okay, what are you doing about it? Oh, well, I don't know. It's not my job to deal with it. So that's kind of the situation. And the entire world is like that, where everyone wants the dividends of peace, but no one wants to pay the price of war. You ever heard of that?
The number one reason that you have peace is through strength. I mean, that's why wars are fought. So anyway, let's switch. Anything else with tech? You got Benioff doing $25 billion in buybacks. You got Meta laying off 20% of the company. This is coming on the heels of Jack Dorsey laying off 4,000 people. I think we get more layoffs. To me, that's not good for the economy.
What do you mean, like that Jack Dorsey's laying people off?
No, Zuckerberg's laying off 20% of Meta. Right. You got Morgan Stanley, I believe, laying off 2% of their company. And I think you're going to see more financial firms laying people off. Now, New York City real estate, you got Mark Holliday coming out saying that they are leasing at record rates. Harvey AI just took a ton of space. We're seeing other things that make it look like leasing is up. I mean, SL Green is saying they're going to have a record year this year, get to, I think it was 94.7% leases in their buildings. So corporate space isn't necessarily hurting in New York City, but these companies laying off a lot of people is not good when there's a lot of things that are uncertain for the next 3 to 5 years with how the workforce transforms.
Yeah. I mean, the way I see this whole thing playing out is that companies are discovering that with AI, it's costing them money to go with AI, but it's cheaper than hiring people. So I think what's happening is you're getting two sets of employees now. You're getting an employee who can use AI and enhance their productivity by a magnitude more than what they were doing before. And then you've got all these other employees that are, more just doing the busy work that they normally are doing. So the question then becomes, okay, what's the what's the goal here? Is it to basically maximize shareholder value? Yeah, then you have to take those decisions that sees that, you lay people off and you take, and look, layoffs are never good. I don't like people losing their jobs, but that's just how capitalism sometimes works. And that's the darker side of capitalism. But the one good thing is that those people that do get laid off, their talents can get, develop somewhere else. If anything, it might be an opportunity for a lot of them to upskill. And, like there's a lot of times where people, they get too comfortable in a position, and until they get that first layoff, they don't necessarily think that they need to keep improving. And so sometimes the layoff is like a step towards, hey, I need to do more. I need to do this. Some people actually end up starting a business, and that could be something that could be positive for them. I'll give you an example. My brother, he used to work for Chrysler in 08, 09. He got laid off, and he was unemployed for almost a year. And it was like, it sucked, right? But it also got him to start thinking about, what, I need to not be, running the rat race and always be at the behest of a boss. So he opened his own business and he did very well for himself. And the thing is that motivation to leave your job would not have been there. And I think he's probably still would have been working there, in a 9 to 5, had he not gone that route. So I think sometimes when tragedies do hit us, we have to reinvent ourselves. We have to do more now. And it's always tragic to see something that happens at like a higher age. Like my brother was really young. He was like 23. So it wasn't like something that impacted him so negatively. He wasn't married. So he could move. He could like make a career change. A lot of people don't have those options, of course. But within tech, I think there's enough opportunities in tech in the future where if you do lose your job because of AI and all this other stuff, where I think if you're willing to commit to some upscaling, you could find another job, in which case it could actually be something better than what you have today. So, I'm not trying to justify the layoff. I'm just saying that a lot of times people feel like when they get laid off the first time, it's like, oh my God, my world is done. Like I'll say this. The only time where I haven't had a job since I was 16 is between when I got out of the army and I was looking for a job. And this was like 09, 2010. That was the only time I was ever unemployed. And I was unemployed maybe probably 3 months. And it sucked. It's bad. Like I put my resume everywhere. It was horrible. But it also made me like upskill myself as well, because I did go to school more. I got other qualifications and certifications that I normally would not have necessarily looked at had I got my first job. And then because of that feeling of being unemployed, I remember my first job, I went to an interview and it was through an agency. This agency had sent me and 3 guys to this hospital in Brooklyn. Where Flushing and Broadway are, like
Yes.
Woodhull Hospital. So I used to
Yes.
work at Woodhull Hospital. And I remember I went to this agency in the city and they said, look, there's a job like as a temp at this hospital if you want to go. And I said, sign me up, I'll go. I went with 2 guys. One guy, we got off the train and literally downstairs he gets onto the Jamaica side. He's like, screw this is not for me. He just looks at the neighborhood because he was like white as rice. This guy has never seen probably like the inner city before. He just felt uncomfortable. He left. This other dude got to the front door and he just saw like this homeless dude, like just begging. And if you were in Woodhull back in the day, you would know exactly. He bounced right after that. So I was the only one that ended up upstairs. And I remember the guy said, he gave me an interview. I did a really good job. And he was like, why should I hire you versus the other candidates? I said, what other candidates? The other 2 guys, they left. They're not coming. I said, I'm your only choice. So, it was definitely an experience. I got mugged there about 3 times. But I grew up in that kind of neighborhood my entire life. So for me, it was like just kind of accepted it. It's good life.
Let me ask you this. Did you hear anything out of the GTC conference?
What do you mean, like?
Jensen said last year we see 500 billion worth of demand over the coming quarters. Now I see that number at minimum is 1 trillion.
I think that was clarified that it wasn't supposed to be 1 trillion for the year. I think it was a it was a combination.
Yeah, he said coming. The quote was coming quarters. So I don't know how many, but he's basically doubling the demand that he was forecasting for.
Are you sure? I don't think that's the case.
That's
Like I said,
the quote.
I was reading different things. I saw. Can you bring up that slide if you have it?
So I'm looking at somebody's account on X. Hold on. I should really bring up a Mit's account because he probably put it out there, but I found this visual. And this guy's got, or this account has 109,000 followers, so they're pretty big.
That doesn't mean anything. That's like, you got to look at the slide that Nvidia actually showed, because from what I saw that it was multiple years. I think Nvidia actually clarified it too.
I did talk to Tanner on the phone also, and he said something very similar. And I know he watched it. Let's see what Tanner was saying. Here we go.
Okay, I found
from Tanner. Jensen just said Nvidia foresees 1 trillion in compute demand for next year. What the fuck? 50% of my portfolio is in Nvidia, and yet I don't feel bullish enough. My guess was 800 billion. This is a whole nother level.
Nah. See, I think that's where people are getting mixed up, and that's why the market reacted positively, and then once they really consider it, they pushed it back down. But take a look at the slide. Look, he said GTC right here, 2025, right? That's when they said it. In 2025 to 2026, it was going to be $500 billion. And then here it says 2025 to 2027. So this is 2 years, right? So it's going to be $1 trillion here. So it's not 1 trillion in 1 year. You see what I mean? Yep. So where's that $1 trillion a year thing that he's talking about? I think the estimate is correct.
So it's probably what you're saying, 1 trillion through the end of 27, probably.
Yeah, exactly.
Let me see what exactly. Put on his.
Yeah. I mean, I said,
that's a lot. That's only 2 more fiscal years. So, I mean, think about that for a sec.
Right, but if they did $500 billion in 2025 to 2026, and then they did 1 trillion in 2025 to 2027, that means that it's 500 trillion in each, right? No, I mean, it ramps up. Revenue, it ramps up to
their revenue was only 216 billion this year.
No, I understand that, but what he's doing is taking the TTM and going forward like that. So you see the curve. It's not like they're going to be spending $250 billion, the first quarter of 27, 250 in the second, 250 in the third, 250 in the fourth. It's not like that. What he's saying is gradually it's moving up, and the total amount that's going to be spent in those 2 years is going to be $1 trillion. Do you understand kind of what it is? I mean, if I'll show you on Fiscal AI how that ends up coming up. Sorry. I'm telling you, that's the slide was a little bit bit
basically he's saying they're going to do 400 billion this year in revenue and 600 billion the following year. Is what
which is about right.
Which is incredible. I mean,
it's just not the trillion that people are assuming.
No, that's trillion over 2 years. When you're at 216 billion, that means that they're going to do 80% revenue growth this year.
Right. No, I'm totally with it. I think these are the current estimates that are out there right now for Nvidia. Like, let me just share revenue. Okay, so let's take a look at this. All right. So let's just bring up the revenue counter. So you see right here in 2026, they're projected to do $250 $15 billion.
That
Okay.
was the fiscal year that just ended.
Right. So this year that's coming right now, they're going to be spending $366 billion. And then the year after that,
They're
which
not
is
spending,
2027,
they're going to generate.
right. So they're going to do 366 plus 468. So what does that total up to? So basically what you would do is you would take the combination of all 3 years, right? And it would be
that 367 is going
215,
up.
215, 366 plus probably 468, right? So there you go. That's your 1 trillion. That's what he's talking about.
70% growth rate this year.
No, I totally agree. It's not. No one's denying that. I'm just saying. Some people thought. I think you were thinking that they were going to do $1 trillion.
The way that Tanner wrote it and that other guy wrote it made it look like in the coming quarters, 1 trillion.
Bro, I don't know who's buying $1 trillion worth of GPUs.
I mean, that's the way that they're writing this.
No, I get it, but they're wrong. That's not.
I didn't watch the conference. I was at work, guys.
Yeah. No, I mean, that's why people saw that shit and there's $1 trillion, you know, but it's not like that. It's a combination of all the 3 years. So, which is right. I mean, Jensen didn't lie. There's no lying here. It's just, you know, it's just you have to read between the lines a little bit, you know.
What makes this stock get out of the rut is the question.
What makes it get out of the rut?
Yeah, I mean, it's been sideways for 10 months.
I mean, naturally, it doesn't have to necessarily get out of a rut. It just needs to keep performing, right? So if you look at
I'd argue it's been performing and then some over the past 3 quarters.
I think
the stock's been sideways.
I think people need to just have some patience, man. This is like the show me stage of everything, right? So if you look at this on a forward valuation, so I think that's probably the best way to look at it.
I mean,
forward enterprise.
I mean,
right. So I'm saying forward enterprise value right now is about 17 times. Okay.
Yeah.
So that's current. And you can see that it's waffled between 30 and 17, right? So people are taking the law of big numbers here and basically saying to themselves, like, wait a second, like I am not going to pay a 30 multiple on a company that's hitting some maturity levels. I mean, growth rates are naturally going to be slowing down. Like there's no getting around it. It's just the law of big numbers. If you look at this on a forward basis, right? Growth this year is going to be, let me just move this aside.
70% this year, 27.5% next year.
Right. So you went from literally from 114% growth down to 65. You're getting the Rubin hit, so 70, and then projected after that is 28. Right. So no one is going to say, yeah, let me pay 35 times earnings 35 times EBITDA, right? For a business that's going to be slowing down from 70% growth to 30% growth. That's a big drawdown, right?
But
so
at the same time, though,
yeah,
January 2028, the next year, okay, they're going to do 70% this year, 27% next year. That 27.5% is $100 billion worth of revenue.
No,
it's a huge number.
But I'm totally in agreement with you, and I think that's the reason why, if you look at this on a forward basis, right, a 20 times multiple on this company is very doable, right? Like people will be willing to pay 20 times this. So I think right now, as the earnings start coming in and the EBITDA keeps growing, you're going to see the multiple here probably flatten out and stay at that roughly that 20 multiple, in which case, if you're doing a target for, let's say 2027, right? And this is on a forward basis. So by the end of 27, so you're looking at, let's just do total revenues. Let me just do an EBITDA calculation, and then you're going forward out to 2027, you're looking at $248 billion in EBITDA, right? So let's just calculate that. So this is by the end of this year. So if you're looking at 250 billion in EBITDA, you multiply that by a 20 multiple, you got $5 trillion, right? What's the current shares outstanding for them?
I'll give it to you in 1 sec.
I think it's 24 billion, roughly.
Shares outstanding are 24.3 billion.
Right? And let's say they retire, 300 million shares from their cash because they could make a
Call 24 billion. Yeah.
Yeah. So divide this by 24, $208. But $208
I don't know
today.
Here's the thing. I don't know if it's signing that low of a multiple is realistic.
No. What I'm saying is it's fair value today. Today, like 208 is what it's supposed to be today, which is not
that.
Like
I would agree with.
Right. The question then becomes, okay, what are you going to pay for this same company in 2027, which is on a forward basis 20 times. So if you're looking at January 2028, that's 317, right? So let's say 317 times 20. Sorry, 317 times 20, right? You got 6.3 trillion. Divide that by that time, they should probably have retired another 300 million. So it's going to be like 23.75, right? Yeah. So you got yourself $266 a share, which is where most of the analysts are rating this between 266 and 300. So maybe some of them are saying their, multiple should be a little bit higher, but I would say this thing ends up probably closer to 250 by the end of this year. And if there's any negative sentiment on like, let's say the economy or, competition, then this thing could stay at 220 by the end of this year. But I think eventually it's going to crack that 200. The people that are thinking that this thing ends up at 300 by the end of this year, I don't know if that's going to happen, but I think 250, 260s.
I don't know if that's
all right
either. Look at this. So TipRanks has 39 analysts rating it, a band of 220 to 360.
Yeah, I mean, right there, 273. That's pretty much right where we are. So, what's the complaint here? The market is fair.
Yeah. I'm just shocked that it's getting this low of a multiple after the past 2 quarters and showing accelerated growth this quarter and putting up 70% growth at a revenue of generating over $200 billion. It's just mind-boggling that it's under 200 and it's been sideways for 10 months.
I think the thing is the market is forward-looking, right? So we have to assume that whenever there's any euphoria around this thing and forward EV to EBITDA starts jumping to like 25 and 30s, you need to be cautious, right? So this is a maturing business. Like I think that there's a lot of potential for this company to keep going forward, but I think that the phase where you're going to see this crazy amount of growth is going to, it's a mature company. Like, what do you want? How much money does it need to generate? I mean, at this point, it's literally taking the other thing, Stephen, too, is that they themselves understand that there are some bottlenecks here and there that they have to contend with, right? Even if, let's say, the demand is crazy out the door, you've got pushback for additional data centers. So that's number one. Number two, you've got high bandwidth memory, limits, which is another problem that you're running to with packaging, right? You've got issues with credit happening at the oracles and at some of the other ones. Like OpenAI just said they're no longer building the data centers anymore. So you're seeing
people comes out with a freaking huge ass deal with Nebius today.
Yeah, I mean, these are the challenges that you're going to run into, regardless of how much demand Jensen is projecting. The market can only support so much spend before we start to ask ourselves, like, hey, wait a second, there's not enough money on the planet to get. And the other thing is that I think over time, the demand will get filled, right? But it's not going to happen as instantly as people want. Like, there are timelines where things happen. Like, software is one of those things where, let's say you have a hit product, right? Dude, you could have 10 people using, and then next day you have 1 million people using it. Software scales like whew. Hardware does not scale. It's just, sorry, that's That's one of the unfortunate realities that people don't want to hear,
Well,
but
software
hardware
is
doesn't
asset
scale.
light, hardware is hardware, so much easier
Right.
to sell software.
Soft, yeah, hardware just has a really tough time scaling, you know.
So let's move to this. OpenAI enters talks with private equity firms, your favorite, to form Enterprise AI joint venture. Did you see this?
I did.
So you texted me, you said the name, you want to go into it?
I mean, let's I think we would be doing everyone a disservice by just saying, oh, this company or that company. I think it's better to have people understand why private equity is down, and then we can kind of talk about every company individually and say, okay, we think this one is good or that one is good because of this reason, right? So here's my question to you. You did some homework. So what is the reason why private equity is down so much this year?
So right now, the AI software disruption narrative. I mean, Blue Owl is down a ton, Ares is down a ton, KKR is down double digits since February. There's a lot of fears about their exposure to industries being disrupted by AI, including software. I mean, Blue Owl redemption shock happened. They had liquidity crunch. Blue Owl restricted withdrawals, and they permanently halted quarterly redemptions on one of the funds that one of the BDCs I'm invested in had exposure to. Um, there is a private credit crunch coming, and these companies are getting taken to the woodshed right now. And a lot of people are worried that they're cannibalizing their investments because they're investing in data centers with AI, and a lot of them have a lot of exposure to smaller and middle market software companies. Then you also have the exposures, some of them, such as Ares Capital, has 66% of their assets locked up in credit. You have Blue Owl, 51% of their assets locked up in credit. So if a credit crunch comes, those two companies are going to get whacked even further.
Okay. So I'm going to go a little bit more granular and try to give us a little bit of a time machine experience, and then after that we can discuss. So
Yep.
one of the things about software, and this is something that Mark Andreessen said a long time ago in like 2000, I think it was 2010. It says software is going to eat the world, right? Software is one of those things where you can take an idea, you can make a very efficient, product, and then you can sell it to people, and people buy that software and they use it. And the thing is with software, like we just spoke about before, it's infinitely scalable. If it's a hit, it can get scaled everywhere. So one of the things is, people over the last 10 years, businesses, they started to create software that was very industry specific, right? And they were also softwares that were very broad. Now, private equity, they saw this and said, wow, this is a great business model. You have a product that basically has already been written, and all you got to do now is just update it once in a while, and you just got to have some services. There's no hardware component, there's no depreciation. It's just free cash flow on top of free cash flow, right? So we can buy this stuff. So what happened was, a lot of these private equity firms, what they did is they bought a lot of these software companies, and they bought them at a very, very expensive multiple, because they were thinking, well, even if I'm overpaying for it today, the cash flow that this company is generating, it'll take me 3 years and then I'll get all my money back. And then I've got this stream of cash flow that's durable, that's going to be here for the next X amount of years. And so private equity, what they do is they take money from, rich people with institutions, foundations. They take that money and they say, hey, we want to be here. The other thing is, because software is a key component to a lot of businesses, they have lock-in. And so that free cash flow is not something that just goes away, right? There's no like depreciation or anything else you have to worry about. So a lot of these private equity companies, they bought this. Now, the other thing is, a lot of these private equity companies, they issue debt to a lot of these software vendors. So what happened is, a good portion of their portfolio, sometimes almost half, sometimes a quarter, sometimes not as many, they were basically financing all of the development of these softwares. Now you have Claude come in, right? And all of a sudden with AI, people are like, hey, I can build this software and it doesn't take me an entire engineering team. I can build it in a couple of months. And so people are looking at this and saying, holy crap, the cost to make new software has gone down so much that now whichever software is out there is going to be cannibalized. Like, if Salesforce is charging $10 a seat for a subscription on enterprise, someone else can come in and develop a CRM that can do the same thing and only charge $2 and basically undercut Salesforce. And now Salesforce is down the train, or at least I'm just giving you an example. I'm not saying that's what's actually going to happen. But so people are assuming that now the moat that software had around it, which was all this R&D, all this development, all these coders that required, you needed to hire DevOps engineers, all of this stuff is going to get abstracted away, and you're just going to have software that's going to be made by AI, and everything is going to be good. Now, I think it's an overcorrection. I think that there are softwares out there that are disruptable. Okay, they're not infinitely scalable. They're not infinitely, what's the word? Like, they don't have a big moat. There are other softwares out there that are very, very, very strong moats. They've got a whole bunch of people that already use it, people comfortable with it, like an enterprise right now. With we've spoken about Workday quite a few times, right? You have HR software called Workday at your organization. The cost of replacing Workday for you would actually be immense. Now, there is a point where if Workday says, hey, I'm going to charge you 10% more and 20% more the year after that and 30% more the year after that, you're going to get fed up and you're going to say, look, I'm going to look for an alternative, okay, because you charged me too much, right? Before, you didn't have a choice because Workday was the only thing that was out there. Let's just say it was. I'm not saying it is. So people were kind of locked up, and that's why a lot of these software names were able to maintain these super high margins, and they were able to grow. So if they said to you, hey, we're going to raise your prices by 10%, you didn't really have a choice. You just kind of had to pay it. Now that there's actually real competition that could come along, people are worried that you can't demand 10% increases anymore. Maybe you can get away with a 2% or 3% increase. That means that the growth rate on a forward basis is going to come down significantly. Now, the other thing is a lot of software names, they were trading at crazy high multiples. There's no getting around it. People were paying, and some of them still are.
Some of them still are.
Paying 30 times trailing EBITDA, which is insane for a company that's only growing 10, 15% per year. But people are like, well, it's durable, right? The moat is always going to be there. You're never going to have a situation where this software is going to be disrupted. So fuck it. I don't mind paying 30 times. Eventually I'll get my money back. It's okay. Now people are saying, whoa, I'm not going to pay 30 times. Some of them are saying I'll pay 20 times. Some of them are saying, hey, I don't even want to pay 10 times future earnings for this thing. So that is where we are in the market, and now private equity is exposed to this specific industry. So everyone is saying whoever has exposure to software, their investments are likely to be, shrunk, right? So one of the challenges with private equity is that no one really knows what the value of the company that you have unless you have a counterparty willing to pay for it. So, if I say to you, hey, this pen is worth $10, it's worth $10 because I said it is, right? No, it's what you're willing to pay me for it. If you say, hey, Kris, I'll pay $20 for this pen. Now, all of a sudden, this pen isn't a $10 pen, it's a $20 pen. Now, if you tell me, Kris, this is only a $5 pen and I'm trying to sell it to you, what's the worth? It's only $5 because that's what you're willing to pay. So the market is saying a lot of the companies that you guys bought in 2018, 19, 20, 21 at crazy high multiples, they're not worth what you bought them for. Hell, they're not even worth 20 cents on the dollar for what you bought it for.
The problem with the private markets.
Yeah.
That there is no sell button the way there is in the public markets. And you have to find a buyer for your shares. And a lot of these companies that invested in small software companies, they're getting marked down. And it's impacting the valuation of the companies.
Yeah. And the thing is, now you're also running into everyone is scared that software is going to get disrupted. So even if you were out there and, if your investors, like your private equity investors, they come to you and say, hey, listen, I want my money back. I gave you $1 billion. I want my $1 billion back. Now you have to try to say, oh crap, I have to sell this business. And while everyone is freaking out, you've got a liquidity crisis. Now people are saying, I'll buy this for you, but I'm not going to give you no $1 billion. I'm going to give you 200 million. And people are saying, what? So that's where the market is sort of getting worked up right now. So the opportunity here, though, is that there are companies that have exposure to certain types of software that, in my opinion, can hold their value much, much more than others that are a lot more disruptible. And so you have to be very specific on which software you're talking about.
Are you worried about the BDC shock that's coming? There's 12.7 billion, I believe, if I did the numbers correctly, in unsecured BDC debt that matures for the big four at the end of 2026. And it's a huge increase from last year.
Say that again. I'm sorry.
So there's roughly, I believe, 12.7 billion in unsecured BDC debt for Ares, KK, KR, Blue Owl, and TPG over the next year.
Well, this is the other problem that that these private equity guys have been running into, and that a lot of their financing that they use to basically buy these software companies outside of their investors' money, because some of them actually took on leverage to buy them. They got that leverage from where? They got it from the banks, right? So they got it from JP Morgan. And you know what JP Morgan recently did? JP Morgan said, listen, we're not giving out any software-backed loans anymore, right? So that kind of screwed the pooch. The other problem that you run into, especially on the credit side, is that, other businesses, they have assets. Like, let's say you buy an oil company. The oil company has oil fields. They have the pipes. They have the trucks. They have the long-term contracts. Software companies don't have hard assets that have value outside of just the tech that they have. They literally are being valued based on their cash flows. Now, if people are assuming that their cash flows are not durable, then people are not going to be willing to pay, right? So that's why right now, if you look at JP Morgan private equity, take a look at this. Right here, JP Morgan marked down to restrict lending to private credit firms. So the thing with private credit is that part of the money that you have is coming from investors, but then part of the money is also coming from, let me see, sorry.
No, it's fine. While you're finding that, Ares, their CEO and CFO both purchased in February. It looks like. I'm looking for insider trades. Does that make you encouraged at all?
A little bit here and there, but like I said, I haven't read up on it, so I can't really say. But this is how private equity firms they basically finance this deal that they have. So you have a private equity fund, right, and you have a private credit fund. So these guys, they typically invest in a lot more equity part of the business. These guys invest in a lot more credit side of the business. Now, every private equity credit firm like TPG, like Ares, all of these guys, they have different things. Some of them have debt, some of them have equity investments. But one of the things is banks are one of their primary lenders to finance all of this stuff. So you've got investors, you've got banks, and so these guys all lend to each other, and this is where the money ends up going, right? So you've got private equity firms, they buy the private equity. Sometimes it comes with debt, so they have to take on the debt. The company itself has the debt that's assigned to that company, right? Private credit firms lend money to this debt, and so this is, like I said, this is where all the equation that governs all this stuff. The problem that you've run into is that banks now are saying no, And now you have investors that are saying no, and I want my money back. So what happens now? Investors will not put money into the banks that are willing to lend to these guys. Investors are now willing to buy the public debt, like Oracle. Remember, Oracle is issuing a whole bunch of debt. Look at the CDSs on that debt, right? Credit default swaps on that debt. So right now, the yield on Oracle's debt is almost like 8% because public investors have said, no, I'm not going to give you any money. Screw yourself. Private credit firms, they don't have the liquidity because the banks stopped lending to them. So they're not in the game anymore. And private equity firms are holding on to equity that may not be worth as much money as they bought it for. So this whole business model has basically collapsed on itself. And that's why I said last year in May, I said, this is the next ticking time bomb. You know, people need to understand this whole thing. And one of the reasons why this was a problem last year, I didn't think about software. Like that was not the reason why I thought this was going to be a major problem. The reason why I thought this was going to be a major problem was because when we had First Brands and Tricolor, those two companies with predatory lending for used cars, they went down. And I'm like, I looked at the financing and private equity was all over this thing. So it was like, oh shit, the hell. So
look at this. Oh, where the hell is it? Do I have that many things open? There we go. KKKR, huge insider buying, all since February, within the past month.
Yeah.
About 40 to $50 million worth of insider buying.
Yeah. So one of the things that's happening is people are looking at this and saying, we need to give the market confidence in order to stay with us, to not basically bail on us. So they're buying, you know. Blue Owl, same thing probably.
Blue Owls, yeah, they're buying.
Other firms are buying also. Look at TPG. One of the, I just read today, Fortress just bought a large position in them.
So this is Blue Owl. They bought at the end of 25. TPG, let's see if anybody's buying. Nobody's buying. Their last thing was a sale July 2025.
Yeah. I just saw that Fortress just bought a bunch of TPG like today. So
do you think the landscape with rates is going to get better and we could get a bump in the second half of the year on private equity firms?
Well, it depends, right? You got two problems. There's two things that have to happen. Number one, we have to get this narrative that the SaaS companies are actually still healthy, right? So Adobe put up amazing numbers. Adobe said, look, people are thinking that we're going out of business, but where RPO is, you know, at the top of the range that we've had. We've got continuous growth. So if there's any disruption coming, it's not coming for us. And so a lot of the narrative around SaaS getting destroyed, I think may or may not be basically just headline grabbing news. And so that creates real opportunities to buy fear, right? So this happened 2 years ago, almost 3 now, with regional banks. Remember, everyone looked at SVB and First Republic, and what did people do? Everyone got freaked out and said, oh my God, I don't want to touch a regional bank. People were selling banks. Yeah, they're selling like banks with strong balance sheets for 60 cents on the dollar, which made no sense at all, right? But this is where if you had some courage, you bought some regional banks, you did well over the last few years, right? So the key right now is, do you have the courage to buy some of these software names and basically hold on for dear life while the market figures out that maybe these companies are not getting disrupted? Like a good example is ServiceNow, right? Like I don't think ServiceNow gets disrupted. It's too integrated into the ecosystem. I don't think any of the cybersecurity names are getting disrupted. Why? Cybersecurity is one of those things that it takes a really long time for you to build confidence in your products. You can't just say, Claude, code me a cybersecurity software, and now all of a sudden you've got yourself the next CrowdStrike. That doesn't work.
It goes so much further than that. And I will tell you this right now, as I was in a meeting today about something similar, and I will tell you, my opinion, I don't have any proof on this. No general counsel at a company, okay, no C-suite is going to allow a switch, or a compliance officer is going to allow a switch from a CrowdStrike or a Palo Alto to a homegrown coded threat monitoring, whether it is the knock or the sock side, because it is their asses and their job. And there is no way it is going to happen. You need their signatures. You need one or two people. Most corporations, and this is where I lose my shit with so many people. In order to enter into a agreement, okay, there is a big difference between having an approval level on what you can spend and who can enter the company into a binding agreement. They are two completely separate things. And usually there are only two people that can allow the company to get into a legally binding agreement for services, is the CFO and the CEO. Those things also have to get vetted by the legal department. And in my opinion, there's not a legal department or a compliance department that is going to allow a company that has any type of exposure whatsoever to leave a CrowdStrike for a homegrown product. It's just not happening.
Yeah. Yeah, I mean, it's in my opinion, it's too obvious. There are segments of the software industry that I think are ripe for disruption, but then there are others that are going to be just fine. I mean, these are the ones that I would look at investing into. And if you don't want to take the risk of trying to find each company individually, you can just deal with, you can just buy the index, right? Like IGV. Like that's what a lot of people did with the regional banks. They're like, I don't know which one's which. Like, I don't know which one to pick.
Yes,
So they just people just bought the index, which is KRE, and KRE did fine, So the key here is understanding that, okay, this market is selling off a lot of these names. Some of them will definitely disappear, but others are going to be fine. Let me see if I can show you the companies that I think are going to be fine. Here we go. These are going to do okay. So software businesses that are system of record, deeply embedded workflows where AI enhances customer experience, right? So think of the ServiceNows of the world, right? ServiceNows, they're not going to get disrupted by AI. They're too ingrained into an organization's ecosystem. They also have, literally, my ServiceNow instance that I have from my work, they have tickets that literally go back into 2014 that we've completed. We've had issues, we've had bugs that we've run on. All these ticketing, all that information, we cannot just rip it out and take it and put it into another software, right? All those past issues that we've had are things that we need to, number one, maintain our quality assurance compliances, right? But then also use it for our knowledge base, so that if we do have a similar issue in the future, we can deal with it. And if there are ever any past litigation issues, we can go back and look at the tickets and say, this was the reason, blah, 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 that happened, blah, blah, blah. So first of all, if you have a software that has all of this information and it's had it for such a long time, you can't just rip it out, strip it, and put something new in. So those companies are going to be fine, right? Vertical software companies that have developed proprietary data perimeter where application of AI creates incremental revenue opportunities, right? So these are companies that basically are ingrained into your organization. No matter what you're doing, all that data is literally going to stay there. So very similar to the first thing. So the data that you have is very proprietary. You can't move it anywhere. It's going to stay there. If anything, the AI is going to be sold to you as a way of making you more efficient. And then you have cybersecurity firms. That one you just laid out yourself, right? Cybersecurity firms, which stand to be net beneficiaries due to increased threats to enterprise data security from AI. If you think that coding is only done by people with good intentions using AI, you are wrong. People are going to use AI to create malware. And then you're going to have a shit ton more malware, which means that cybersecurity is probably going to become even more important going forward, because you're going to have so many threats coming from all these AI shit. I mean, how many emails do you get? How many spam bots did you get because of this fucking AI nonsense? I get
I know it's because of AI nonsense, but I get so many freaking emails. It's crazy. Crazy.
And it's all because people can set up a freaking bot that can do all this shit. Some of these bots can literally talk to you as if they're a real person. You know, it's AI is one of those things that's like Pandora's box, man. Some of it's good, some of it's gonna be really freaking bad. So I don't think any of these guys are going anywhere. So
Salesforce, ServiceNow are the two that I still think are going to be very good. The cybersecurity, I'm not worried about. Adobe's numbers are the best out of all of them. I just don't know their business enough. I think they're going to be fine, but I just don't know the product well because I don't have any exposure to it.
yeah, I think Adobe's challenge. The other thing, and let me just mention this by the way. Let me just it's important. The pricing model that's been around for a lot of these software companies has been seat based, right? So it's like if your organization has 5,000 people, you need to buy licenses for 5,000 people. And basically everyone, when you go in, you log in, that's your users. You have an enterprise license with a number of seats. And so the company pays based on those seats. Now, people are saying with AI, you don't need to have that many people have seats anymore. You can have, let's say, a third of the people that have certain seats. So now, automatically people are saying, well, the cost in the future for these businesses is going to go down. Like, I mean, not cost, but the value is going to go down because this basically the seats are going to disappear. So that's the other argument that people are making as well. Now, on the flip side of this is that people are transitioning to more user-based, like uses-based, consumption-based revenue generation. So if you look at Adobe, what they're doing is saying, we're going to integrate AI into everything that we do, but you're going to pay based on the value that you're getting and the amount of, usage that you're getting. So it's very cloud-like, right? So cloud is in a way where you buy EC2 and you buy S3, but you're not paying up front. What you're doing is as much EC2 as you're using, as much S3 as you're using, that's the amount that you pay for your bill. So we're kind of moving into that kind of an environment where you have more of a hybrid, pricing, like a business model. And some companies are going to be able to transition and some are not.
Yeah, we'll see. We will see. So the cybersecurity ones are the thing I'm going to look at next.
Yeah.
And Tanner, I see him in the chat. He was right over the weekend when he was touting Nebius. Got to give him his credit. Nebius had a big day today. Are you getting into the neoclouds at all, Kris?
Nah, I'm staying away, man. I'm going to stick to what I know. Undervalued companies. I feel more comfortable with them. I'm just going to stick to them.
Yeah,
I think some of the, yeah.
I mean, Tanner, it's not that you called that this would happen today, but your thesis was right. So you were correct. We'll see if it holds.
Thank you.
We will see if it holds.
Yeah.
Yeah, I don't know. It's we're in an interesting place right now with the market, and this can go either way with geopolitical and the macroeconomic. I think Wednesday's a big day. We need the conflict overseas to be done, and I don't think we're going to have a problem with earnings for Q1 if this persists. And this is the big fear that I have. If this persists and input costs are up, transportation costs are up, and if it looks like inflation is going to be sticky and increase, which causes the Fed to maybe only do one cut this year, if that happens, we could see companies have to re-rate their guidance to the downside for the year. And that would throw the market over the edge, I think. I don't know how likely it is because Warsh is definitely on a mandate, but I don't know if he's going to be able to convince everybody to actually cut 2 or 3 times this year. And if oil prices stay higher for longer, I don't know that the majority of these companies hit their guidance. I mean, they all made guidance without any of this conflict in
Yeah.
the atmosphere. They made these estimates with an idea that Brent was going to be around 60 to 65 and WTI was going to be 55 to 60.
Yeah, I mean that's one of the unfortunate realities of investing is that you can have the right thesis, but then something along the way changes. And so the question for that you have to ask yourself is this thesis completely broken, or is it something that's gonna, or is this just something temporary, right? So as an example, the SaaS apocalypse, is this a permanent re-rating of software multiples? Maybe. On the other hand, I don't think that the US is going to conduct war in Iran for the next 10 years like we did with Afghanistan. So, the noise around this conflict is probably short term. So the question then becomes, okay, if I think that this thing can get resolved within the next 60 to 90 days, where should I look for opportunity? And you should buy it, right? And one of the reasons why you catch certain companies do really well during uncertainty periods is because the uncertainty causes people to look at businesses that are insulated from that uncertainty. So as an example, one of the reasons why we've done so well on Verizon over the last, few months, right? Primarily is because people are saying, well, regardless whether or not oil is at, $50 or 100 or 150, Verizon,
Everybody's paying their cell phone bill.
everyone's going to pay their cell phone bill, whether you
Everyone's
have a
paying their
recession
cell
or
phone
not.
bill.
Yeah. I
Look,
mean, yeah, go ahead.
cell phone companies, T-Mobile, AT&T, and Verizon, they are this age's utility companies. You have to have it. The same way you need electricity, you have to have a cell phone. Period.
Yeah.
You have to have internet. You have to have fiber.
Yeah. 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 Like I said, you have to really analyze some of these companies and look at the bare bones. And I know that they don't seem very sexy. It's like Verizon, it's a
No,
telephone
not at
company.
all.
Why would I
But you
want
know what?
that?
There's a reason Verizon pumped. And it can go
Yeah.
higher. I mean, they have to get to 55 for the first tranche. So it
Yeah.
can still go.
Oh yeah.
It,
Oh yeah.
it,
And
it's
the thing
Korea.
And the thing is, they're paying down their debt, so they're meaningfully doing all the right things to get their value up there for shareholders, right? I think there's plenty of oversold companies right now that are in the nitty gritty of things, and like right now, I know everyone is sort of down on PayPal, right? But the thing is, PayPal is one of those companies that, yeah, it's a slow melting ice cube, but it's moving, it's being valued like they're going out of business. And it's like, no, they still generate significant cash flows. They're still going to be buying back their shares. Now, in terms of an absolute return, I think that there will be at a point where I'll exit the position because it's just like, yeah, the upside here is probably going to be, menial compared to what it is. So like I know a lot of people are super bullish on Nvidia, and I think Nvidia has a great future ahead of it. But I think the returns that you're going to get by being in Nvidia going forward are probably going to be about maybe 10-15% per year for the next 2-3 years, in which case if growth ends up slowing down to like the single digits, you could theoretically underperform the rest of the market if Nvidia kind of the multiple comes down, right? In which case now you're relying on share buybacks because it's just
And that's the big thing. And a lot of people don't want to recognize it, but there's a whole cohort of people that understand semiconductors traditionally are boom bust cycle. The best case scenario to correlate to is DRAM. Right now,
Mhm.
we're in a boom, but you look past the 10, 20 years, DRAM has had so many boom bust cycles. At some point, NVIDIA will enter that. Couldn't tell you if it's a year, 5, 10 years out. And that's what people are worried about. For me, I have more NVIDIA than I have Meta. If I had to choose between the two, I think I would be choosing Meta and Amazon right now.
Yeah, I agree. I think Amazon probably has way more durability in its thing going forward. But then again, Nvidia is under Jensen, he's doing his best to try to get away from cyclicality.
Yes.
One of the things that you got to remember about Nvidia is that they're really trying to go on the platform route, where they're taking equity stakes in so many of these other companies that could theoretically be non-cyclical. So it almost ends up being that the value for Nvidia isn't just what Nvidia sells, but what does Nvidia own, right? Like, look, they took an equity investment in Nebius, and it's done really well, right? They took an equity investment in Anthropic, and Anthropic's done really well, right?
Yeah.
So even if there's a future where the hardware sales business starts to kind of come down a little bit in terms of their total growth, their software, because you're not selling as much hardware, you're not selling as much software, that starts to moderate. So even if their top line starts to moderate, as long as you have those equity investments and everything else, you can maintain a pretty decent price on your company's company. And then at the same time, you've also got to remember this company generates a tremendous amount of free cash flow, in which case they just buy back a whole bunch of shares, So I think Jensen understands this. I do think that they're really trying to branch out, and I think that's one of the things I noticed about the conference today, is that Jensen really is trying to highlight the other business segments that are going to theoretically provide for more upside, like growth wise, like the robots, right? Like he said robots were going to be like a few $1 trillion business or something like that. Like they're going to be selling like autonomous car, like partners, through partnerships
with Mercedes.
Right. So they're also going to be doing with Uber. They have a partnership now with Adobe. I don't know if you saw that, where they're going to work with Adobe to create models, custom models for Adobe. It's like, so Nvidia is partnering with pretty much everyone, and they're trying to become sort of like Microsoft in that, their core business initially was the hardware, but I think they're going to transition to more durable revenues going forward in like these other subsets of the market. So,
which I'd love them to do, because that way it'll diversify their revenue mix away from straight hardware, which would be great.
Yeah.
I mean, what else do you do with that cash? I mean, they should be making investments in everybody at this point, and turning into the Berkshire of tech.
I was talking to Amit. This was about 3-4 years ago, and I told him, he was like doing the Audia thing at the time, and he was like, you know what? I don't know if this is going to work out, but I've got all this money left over. And I said, well, you know what? You might as well take that money and invest it in some undervalued companies that they're going to do really well. He's like, nah, I'll just return the money to share, back to the people that I got the money from, and which was the right move to do. And he gave all the money back to everyone. And then he went on a generational run with Palantir. I'm like, the money that he got for starting Audia, if he just took that money, put it into Palantir, everyone would have came out with a 20x return on their money, on their initial private money.
I remember when you were having that conversation with him.
Yeah, I was telling him. Remember, we were talking about it. We're like, look, man, the thing that I told him was that he was burning cash. He was like, I don't know if this thing is going to work. So I was like, look, why don't you buy some dividend? Like, you've got the cash. Why don't you buy some dividend paying stocks, right? Those dividends that come in, use that as cash flow to keep the platform going for as long as you need to get the traction that you need, right? So this way, your cash burn problem. So if you were just sitting in cash, you got cash burn. But if you got other sources of income coming in that are basically paying for your AWS bills and all this other stuff, then, you could extend your runway quite a bit, right? So it was one of those conversations. But like I said, Amit said, no, it's probably better if I just return the money. So he went with that route, which it worked out well for everyone. Well, it didn't work out well because everyone still took a little bit of a haircut, but it was fun to be part of his idea when it was around. So he found more value in doing YouTube and commentary and stuff like that. So and that was the right pivot for him too. He was just like, this actually works out more for him. So
yeah. Well, I am looking at a few things. I'm not convinced that we are going to start running. I think the market sold off in certain areas a lot last week. Today was an interesting bump. I want to see if it can hold tomorrow, and I want to see what happens after Powell gets done on Wednesday, to see where we're at. But I'll say it again. I mean, I know it was up today. I'm not in it, but I was saying on Friday that, and over the weekend, Reddit's starting to look interesting to me. By the numbers, it looks very undervalued, huge growth. I just don't. I don't use the product. I don't know much about the business. Just by the numbers, it looks interesting. But I'm not making any moves until at least Thursday. I want to see what
So
shakes
so
out.
so I'm glad that you brought Reddit up, because you see, like, Reddit is basically just people posting
I know.
on boards,
I
right?
don't. I
So
don't get it.
no. Let me explain something. This is very similar to the narrative that people have with software. Like, AI could just eat up software. Well, AI could probably create a website that's exactly like Reddit. The problem is you've got 100 million people using Reddit.
Using it already. Yeah.
So how do you get people to switch from Reddit to your bullshit vibe coded
When the
app?
community is already there, that's the thing.
Right.
Like
And
you're
I
not.
think that,
Nobody's switching unless there's a vibrant community.
yeah.
That's where all their people are.
I mean, remember Blue Sky? What happened to Blue Sky? Blue Ski or whatever.
Have you looked into Reddit's numbers at all?
I have. They're really good cash flow. I have to deep dive into it. I mean,
It's serious value right now.
is it really?
Yeah.
Take a look. I'll take a look.
So
And there's a good amount of opportunities out there in this market, man. It's crazy. You know.
So huge growth year over year. Gross profit margin of 90% or so.
Mhm.
They're operating positive now. Net income positive.
Okay.
Free cash flow.
And they're just repurchasing shares. I bet they're repurchasing a bunch of
Almost
shares.
700. Repurchasing shares, I believe. Yeah, $100 million worth. And you look at the forward growth rate on revenue, they're expected to do almost 43% this year and 30% next year. And when you look at earnings, they're trading at 32 times this year and 23 times next year. I mean, a lot of analysts with huge earnings growth the next 3 years.
What's driving their earnings growth? Is it just a lot of AI that's like dragging people there, or their partnerships or something like that?
I think
That basically,
advertising and a few other things. And it's also the revenue growth. It's going to go from 3 to 4 to 5,
I mean,
supposedly.
can we actually deep dive on that? Because the thing is, like, Reddit's been around forever. The question is now that all of a sudden they're monetizing and they're profitable. So what's the reason for it?
I've never used it. I don't know much about the business, but when I also went to tip ranks to look at where the analysts were thinking about this, check this out.
Why doesn't Tanner do this on Stock Talks or Stock Draft or whatever he calls it? These White Boy Weekly, as I call it. Tanner, do White Boy Weekly on Reddit. I'd love to hear your thesis on it.
Oh, God. All right, here we go. I mean, 170 low, 235 average, 300 high, 22 ratings on this damn thing. It's 140. I mean, look, it was up big today. I should have bought it on Friday when I was talking about it. I didn't. Who knows if it's going to stay here or not, but I had a big day today. But even though it went up 5.5%, it's still inexpensive by the fundamentals on the earnings. All the analysts have this thing going higher, even on the low end.
I'd like to get a deep dive on the business just to understand it. I don't know it enough to
Yeah, I don't know.
do it. Now, some people have some interesting comments in the section. They're like, AI is monetizing it because they're a data broker. I mean, maybe. Do they have like an API that gives you like sentiment analysis or something like that? That people, or they could. Reddit started dealing with huge companies. They couldn't serve them before.
What is
does
it,
that
Tanner?
mean?
What does that mean?
Why don't you get on here, Tanner, from
He has
your
the link. He's in the
cold
song.
bath?
Yeah,
From a cold
Tanner,
bath.
you don't have to put your video on. Just come on.
Yeah.
Go mic only.
They are going global
For
for
advertising.
advertising. Okay.
Interesting.
Interesting. Yeah.
We should.
Did you
do
hear
a
about?
deep dive on
Did you
that.
hear about Nubank? Nubank is coming to the U.S.
Are they?
Yeah, they're supposed to be expanding here to the U.S. That'll be interesting to see.
I mean, I don't know how the hell. I mean, it makes sense actually in a way.
I
Hard to
mean, dude,
type in the sauna. Phone is in the sauna bag.
sauna bag. He's
What do
got a
you need
sauna
to
bag.
type? Just go to what
He's got a sauna bag.
Tanner. Tanner, go to WhatsApp. You have your phone in your hand. How are you watching this? Go to your WhatsApp, click the link.
That's a
Don't
good point, Steve. I didn't even
don't
think about it. All that
like
BS.
he's trolling us. He has this in his hand on his tablet or his phone. Otherwise, he wouldn't be able to see this. Okay,
It's fine.
he does not have a TV in the sauna.
No, Tanner, invite us to White Boy Weekly and discuss it with us. Look, I call it White Boy Weekly because I don't know what they call it. They don't have a name anymore. They've changed it about 5 times. I don't know what to call it.
Which
I want
show
to
are
call
you
it
talking about?
exactly. I don't even know what show it is
Or
anymore.
what night?
It's Fridays. They
No,
usually do
he
it on
doesn't
Fridays.
do it on Friday anymore.
No, I don't even know
It's
which show
just
he does
Roy,
anymore.
Tevis, and myself.
He doesn't even join you guys anymore. He quit the
No,
band. He quit the
no.
band.
It's just the three of us. You want to join? Friday nights?
Nah, I'm good. I don't want to ruin White Boy Weekly. I'd be the brown dude. Everyone's like, "Oh, what are you doing here, man?" You know. Nah, I also don't like doing streams on like Friday. That's like me and my wife time, man. I don't want to give that up.
Listen, I hear you. I hear you.
Yeah.
But
Yeah.
I will start looking into Reddit. I actually wrote an article that's coming out tomorrow. You're going to laugh, Kris, on SMR.
Mm-hmm.
So I am neutral on it. I'm not buying it, but I'm planning on doing a dedicated stream on it. I want the article to come out first. They're the only certified SMR company out there. They're
Mm-hmm.
likely 3 to 4 years ahead, and they have some interesting deals in place. So I am thinking about taking a flyer on it and just not looking at it for 5 to 10 years.
Mm-hmm.
But it is such a risky thing. I'm just not sure. But they do have first market mover if this actually comes to fruition.
I'll be honest. The one thing that worries me about my investment in Venture Global is actually SMRs, because so much of the demand for natural gas comes from energy like production, that if you have a technology like SMRs become like a reality, that could disrupt global LNG needs. I mean, you'll still need it for like fertilizers and for, like feedstock for like plastics and all this other stuff. But the total value of natural gas as a way to heat your homes and electricity production would go down significantly. And I think that's the part that worries me. So SMRs, they're a proven technology, right? So like if you look at all the nuclear subs in the world, they're all running, and even the aircraft carriers in the United States, they're all running on nuclear power. So, it's proven it's a safe technology for like, they've been using it since the 70s. And I think over time, they can actually get them smaller and smaller and safer. And they have like a lot more fail safes to make sure that you don't get like a fallout event. So yeah, I mean, it's definitely something that, even though I'm still long on natural gas, I think it's always going to be on my periphery to make sure that this is not something that is scalable enough to the point where it displaces natural gas as a fuel source. Because I mean, to be honest, if this thing did become like a really key part of the future, I think we could have an era of abundance.
Yeah, I mean, look, and this is why I am looking into it. And I put the research out. It comes out tomorrow. The big point for SMR over an Aklo or the other ones, And they're all basically pre-revenue. I mean, SMR's revenue is next to nothing. It's like 38 million. So they're the only small modular reactor technology to have received full design certification from the U.S. Nuclear Regulatory Commission. It happened in January 2023 for the original 50 MW module for megawatt. And then again, they got the designation upgraded and approved for the 77 megawatt version in May of 2025. They're the only ones with this designation, and their technology can be singular or in a system up to 12. And they're not at it's the problem is they've never actually built a working one. Like this is all they have the certification. There is no working one in production right now. And they've done a huge deal with Entra One. There's a lot of things with this. Now, there is the $25 billion Japan connection from the $550 billion framework with the US and Japan. Energy is in there with nuclear, SMR is in there, but nothing's binding. You have the RoPower project in Romania right now that they're working on. There's a lot of different things. There was just the big one that everybody's watching is the Tennessee Valley Authority one. So and this is the big thing. In September, Entra One signed an agreement with the Tennessee Valley Authority to deploy up to 6 gigawatts of SMR's capacity across their 7-state service territory.
Mhm.
So if this actually happens, this would be a proof of concept that should theoretically allow them to get a lot more business, and with a first market mover head start that is years ahead of anyone else, it could potentially do something. It's fallen about 80%. It's down from 50. Remember when all these companies went parabolic? This thing's gone from 57 down to 11. Now, it could keep going further, and they're not expected to turn a profit until 2030. But the big thing is, if these go into production and if they get placed, there's a 60-year run rate of them making residual revenue because these last 60 years. And they're the only ones that are going to be maintaining it.
You know, I'm surprised that Elon isn't working on something like this, to be honest with you. Because, I mean, if you look at the Elon ecosystem,
Yeah.
you know, this actually works really well. I mean, if you're trying to get electrification, you know, electric cars, EV cars for everyone, the first thing you need is a reliable source of electricity that's, you know, scalable, cheaper, you know, that makes a car ownership over a gas car untenable compared to electricity. So that's, you would think nuclear would be the first thing. Second is now he's investing in so much data centers and everything. So he knows the value of having that cheap electricity. So once again, I mean, I'd be surprised if Elon didn't come up with a nuclear energy company at some point, you know, but we'll see.
So I'm going to answer that one question. I did read up on Entra One. Keep in mind, this is a new industry, and everything depends on them. So SMR, they're not planning on building or operating the power plants. This is a play where they're going to be licensing the technology, selling the engineering and design services, and earning fees across the life cycle of development. So they're partnering with Entra One Energy. They'll be building, financing, and owning and operating the plants. So you have to be confident in both companies, not just one, because SMR is tied to Entra One. So there's a lot of things that have to go right on this. But if it goes right, they're the only one with the designation. So I'm not buying. My article is neutral. I don't know what I'm doing. I'm currently looking into it.
Okay. Are there any industries that you think are up and coming outside of nuclear that are worth looking
Yeah,
into?
the more
right
I
now?
look at nuclear, I think it's inevitable that we go there. And look, we already have nuclear power plants. You can get indirect exposure with Southern Company or Next Era Energy, but that's your traditional nuclear power plants, not the SMR technology. As
I mean,
far
for
as
me,
up and coming industries outside of that, I don't know. I think the AI is an up and coming industry. There's just not software companies you can invest in right now for it that are new.
if you were asking me, I think robotics.
Yeah,
Robotics is
there's only
probably
one, there's only two plays: Tesla or Serve. If you think the little R2D2 things gonna be rolling around cities.
no, I mean like as an industry, like a growing, like a
Oh, as an
next
industry,
generation.
robotics are gonna be the biggest.
Yeah,
There's
I think
gonna be
robotics.
billions and billions and billions of robots.
Yeah,
There's no question.
I think now with chips and AI, you can actually theoretically have like a personalized robot situation eventually come up. Like I think that just
Oh,
the raw
whoa, whoa,
compute
whoa!
that
Are
you
you
need.
gonna get one?
No, hell no.
I was just, you were about to say yes. I was just gonna say, wait, you're gonna have a Terminator next to you?
Nope. I'm staying.
I'll never forget. As long as I live, the first time I mentioned this to you a couple of years ago, you were like, "You are out of your mind."
I'm not getting no robot for sure, bro. I'm gonna get a cabin. I'm gonna make sure I have all the robot protection things that I need.
You're gonna need to
Uh,
get an EMP, baby.
that's right. But then again, you can always shield against EMP, man. It's not. That's like one of the things that I think the other thing that we're seeing is drones, man. Drones. This war has been commanded by drones now, so I
Now
don't know.
that's interesting. So, what do you think about these companies like Joby Aviation? And I don't know what the correct terminology for these vehicles are, but
EV
it's
tolls. They're EV
EV.
tolls.
Thank
Yeah.
you. So at some point, you got to think that we may not be staying on the road. I just don't know when that happens.
I think they haven't proven their safety just yet. And Elon said this a while ago. He said, look, it's bad enough right now with people owning cars and basically hubcaps rolling off. Imagine you have these giant flying things and a rotor comes off and basically goes and impales somebody, right? So the safety hasn't been necessarily proven yet. I do think EV tolls could be a niche eventually, but I don't know if it's going to become like the next big thing. But I guess we'll see.
I'm about to lose my shit. This better not be real. Otherwise, tomorrow I'm going down a rabbit hole
Mhm.
and I am going after everybody. Wait till you see this, Chris. We'll end on this. Hold on. Oh my God. This better not be real. And after my two tax things about New York State, this better not be real. New York City. Now, I don't know if this is true. I have no idea. Supposedly, and we're going to say that, supposedly, New York City spends more per homeless person than the median New York City household earns, 81,705 per person, fiscal year 25. And 81,705 is the floor. It excludes supportive housing, mental health response teams, and NYPD encampment costs. The city projects 97,000 per person they will spend fiscal year 2026.
I believe it. It's a racket, bro. There's all these NGOs that are involved in this stuff,
How?
and the
How?
incentives. What do you mean how?
How is this even a thing? How?
Dude, it's the same thing with the education department in New York City too. I think per pupil they spend almost like 50, $60,000 per student per year.
Okay, I have to bookmark this. If I start going down this rabbit hole tonight, I am not going to bed. I'm going down this rabbit hole tomorrow.
Listen, there's a lot of things I've learned to not look up because they'll just make me more depressed. So I try not like I've sometimes I feel like knowledge is a curse. And so the more I've been telling my wife this, like I've been trying to like use social media less. It's addicting and I'm addicted to it because sometimes I feel like, oh my God, like I need to go on Twitter and look at things and I need to watch YouTube and look at things. And I felt like I was way better off in life when these things didn't exist, or at least they weren't part of my life. So I have to figure out a way to detox myself away from these things. So I'd recommend you do the same. Stop trying to understand the logic that these idiots are trying to put up, because you're not going to be able to do anything, and it's just going to it's going to give you depression, dude.
Another one bites the dust.
What?
Another one bites the dust.
Billionaire Uber
Just
co-founder.
now, Travis Kalanick is moving. He's moving. Another one. Tax
One
policy,
thing,
baby.
one thing that was a counterpoint to your argument about the Mamdani thing that I was going to make, but then I said, it's probably not a good one to make.
Let me hear it.
New York City is going to force all these people to sell their homes and basically get out and go
Before you
elsewhere.
go down that road, this is not a proposal for New York City. It's a proposal for New York State.
Right. Okay.
Yeah.
Well, New York State.
Go on. I just want to make it clear to everybody in the chat.
I think if I had to make a counter argument that this could be a good thing, in that there's too many people that are incumbents within the city, older families, wealthy families that have built empires that basically make New York City a old folks home. And there's no vibrancy left in New York City. When I was growing up in New York, I still remember people used to have kids, people used to play on the playground and stuff. And right now, for someone in their 20s looking to work, they do not have the opportunity to even afford to buy a home. So if you're able to basically confiscate all the wealth, and by confiscating all the wealth, you end up causing prices to dramatically decline, that could mean that people who are actually going to live there might end up living there, and they might actually raise their families there, and you actually get a city that's more vibrant instead of just a bunch of old people that own all the homes and businesses.
I'm gonna pretend you didn't just say all this.
I'm just saying it's a theory. It's a theory. It's a theory. I'm just saying, if you have a whole bunch of people that basically you have these incumbents that own all these homes, they never sell because they're just like, oh, every year my property keeps just going higher and higher, then what's going to happen? You're going to have a city with a median age of 55 and above. And all the younger people are just going to say, oh, screw it, I'm going to go somewhere else. I get it that a lot of these people have worked their entire life, but at the same time, there's not as much churn, right? Because you have so much incumbency. What do you think about that?
I think I have an image of Martin Lawrence in my head going, woos. Woos.
Yeah.
Like, I am so on the other side of this for the main reason of this is a situation where the estate tax being 7.1 million, if you wanted to, not you, but in general, I would not have made these posts if the proposal was to drop this to 4 or 5 million. I wouldn't have made those posts because there's no argument that you can really make at that point. Now, dropping the estate tax to $750,000 is so dangerous because that doesn't even cover the median price of a house in the most dense areas in the state.
No, I get it. But I was reading this article on New York Times, right? And it was talking about this family that had owned this home, this townhouse in Brooklyn for like forever.
Oh, I get it. Multi-generational. I know exactly where you're going with it. I get it.
And basically they were living in one of the apartments and the others were, renters, and they were just, and they were like, oh, I'm going to transfer this to my kids. And I get it. But at the same time, it's sort of like because of the rent freeze, because like the buildings had like a bunch of rental apartments in there, they ended up selling it, right? And they ended up selling it to a corporation, and the corporation ended up renting it out, and the people who ended up renting it were younger people and all this other stuff. And I got to thinking, I was like, wait a second, one of the reasons why you can't buy a home in New York City is because no one's selling. There's no incentive to sell, right? So if there's no incentive to sell and leave, then how does the next generation ever come in.
One of the problems is prices are out of control. I don't know where all these people get this money from, but you go to some of these open houses, and I've driven by them on the way going out to visit my parents and stuff. I gotta tell you, the amount of people at these things, and you start looking at these offers, and I know because one of my best friends sold his house, he thought the price that the broker told him was insane. He got 3 offers same day, cash over the listing price. It's just the whole situation is crazy. The problem,
Someone is saying build more housing. Unfortunately, Manhattan,
good luck.
good luck. There's not a lot of space left in Manhattan to build any housing.
Yeah, so Manhattan, the only way that you can build at this point, 2 ways. You buy a small building and you knock it down, you build a bigger one, but that takes zoning laws. Or you convert office like what they're doing with the old Pfizer building. So the old Pfizer building on 42nd Street between 2nd and 3rd, they moved their corporate campus to Hudson Yards on the west side. That entire building is being renovated for apartments. Now, the big problem with the estate tax is you're going to force more businesses to fail because more businesses will leave with these tax policies, because it's not just the estate tax. They're talking about corporate tax, they're talking 2% on millionaire, et cetera, et cetera.
Yeah, but then, Steven, wouldn't there be a whole list of people that are willing to move to the city because the prices are going down?
That's the counter argument. But people going to move to a place where jobs are leaving doesn't make sense. And these people are going to take the jobs with them. They're the ones that are building companies. You have corporate campuses leaving. And the big thing is if you keep becoming restrictive, you are going to drive all the talent away. And the estate tax specifically, you think about that deli, you think about the dry cleaner, you think about the pizza.
Steven, but if people can't afford to live there, then how do you attract younger people to come there and develop business in the first place? Because people can't live there, right? There's no affordability.
Hold on. When you get the estate tax, and this is what is going to really hurt. If I have a business that I leave to somebody and you go on the EBITDA multiple and it's worth $3 or $4 million, and now they have to pay, let's say that's the upper end of 50% tax on that, and only $750 is exempt. They either have to take a loan, sell the business, or close the business. This is going to force a lot of money to leave. New York has lost.
But then there's going to be
$111 billion of tax revenue has left the state in the past decade. $111 billion. That's $111 billion of taxable income that is now funding projects in other states. That's the problem with all these taxes. They're pushing wealth out.
Once again, if the wealthy people leave, that frees up more space for not wealthy people, right?
So it would free up space, but the point that people miss is when that wealth leaves, that is wealth that is not getting spent in the community. That's people not going to dinner, people not going shopping, people not joining clubs.
I mean, yeah, but Steven, if you have a person who's like a billionaire and they leave, great, they left, right? Do you think billionaires are out there spending 5,000 meals a day? Or do you think it's more important that you have 5,000 young people move in that eat 5,000 meals a day?
Most likely those billionaires are investing in the community and creating jobs.
You really think someone who's got, like, let's say a private equity arm is out there like, yeah, let me go spend money in my own local community, like at the rate that someone who literally is forced to buy goods and services.
So let's not use anybody by name, but there's a couple that come to mind. I would think the ones that come to mind have an office here. They have employees, whether it's 10, 20, 30, 40, whatever it is, because PE firms aren't going to be huge. That's what we're talking about, PE firms. Okay. You now have, if they leave and take the firm with them, the macroeconomic environment around with all the trades, something breaks, they're not getting those phone calls. They're spending money on lunch. They're going out to dinners. They're taking clients out. They're spending money in the community. All that money leaves. Now you have bigger companies Goldman Sachs is spending $500 million opening a campus down in Texas now. That could have been the financial district in New York. You had
Right, but
Citadel
then,
leave Chicago.
but
You
that
have a
also
lot of
means that
these things.
yeah, but that also means you have all these people who are making tons of money moving into the area and raising prices for everyone else as well, right? So
It's not
affordability just becomes a
necessarily
bigger and
true
bigger problem, right?
because a lot of these
I'm
people
just
can
I'm just playing the
afford.
devil's advocate. I'm totally in
I get it.
disagreement of everything that I'm saying, but I'm just
I
playing the
know.
devil's
I know
advocate.
you are.
Yeah.
But the people leaving, okay, can afford to not sell their apartment and just leave and uproot because they're mobile. And they can afford to pay the tax on their property. But now they're not spending, they're not donating, their philanthropy is not there. There's a lot of things that leave when these people leave. And that tax needs to be made up by everybody else.
Right.
Still got to pay cops, still got to fix the potholes, still need the lights to come on. Like you
Yeah,
have
but it
111 billion less.
but it also means that all these people that are leaving, that should drive costs down though, right?
No, dries it up. Because now, without those people paying those taxes, those income taxes, where's that money coming from?
No, I'm just saying it churns within the community more than someone who's using New York City as a pied-à-terre, right? So if
If
you have
you
someone,
lose somebody who is a billionaire that makes $100 million a year that's taxable income, and you get somebody who comes in that makes 250 grand a year taxable income, that's a lot of lost revenue for the state. It doesn't
right? No,
even.
and I agree with that. And then what that forces the government to do is basically cut back on additional government spending, right?
You would
In
think.
which case,
You
and
would
then
think so, right? You would
no, no,
think
no,
so.
no. It works because what ends up happening is now the debt becomes so burdensome on the governments, right? That they would either they be forced to cut eventually, right? Or keep raising taxes to the point where no one wants to live there, in which case the incumbency goes down. I mean, that's why one of the reasons why New York City's population has basically stagnated. California's population has stagnated, right? So maybe the Democrats are like, hey, listen, we're going to keep raising taxes to basically, I don't know,
Listen,
maintain some
I
level
don't know
of
what the
upward
policymakers
mobility.
are thinking, but the hard numbers are that 111 billion taxable income left New York. California lost 102 billion over the last decade. Florida gained 196 billion. Texas gained 54 billion. Between 2018 and 2024, 561 companies relocated their headquarters. San Francisco lost 156 corporate campuses. LA lost 106, New York City 27. This is a ton of revenue leaving. It is not good for the city. It's not good for California. It's not good for New York at all. And the estate tax will expedite this. Like this will be, my opinion, the straw that breaks the camel's back. And I can tell you if this goes through, I can tell you if it goes through, there is a 99.99% chance, okay, that will be the straw that makes me leave New York. Along with my
Great.
family.
I'll buy your co-op from you. I'll
Along with
get
my
it for
family. That will likely be the straw.
I'll get it for half the price.
It'll
Let's
likely
go.
be the straw.
Let's go. I'll get your co-op for half the price that you think it's worth because you want to leave. And so do everyone who thinks like you.
And think about this, okay?
Mm-hmm.
Almost 1,700 millionaires changed their addresses out of New York in 2024. And millionaires paid 44.6% of all the personal income tax collected in New York that year.
I
How
want to
crazy is that?
I just want to say something, and I know this is definitely antithetical to what I actually believe, but I'll say it. I think that there is certain aspects and certain traits about certain areas. While we may think that these policies are detrimental, and they seem detrimental on the surface level, I wonder if they are the reason why we get certain levels of innovation in the places that we get that innovation. As an example, California. Why is Silicon Valley the epicenter of innovation? It's not like Silicon Valley all of a sudden became unaffordable this year.
With all the
Huh?
companies that have left, is it really
No,
anymore?
But that's what I'm
It
saying.
was.
20,
It
but
absolutely
no,
was.
but Stephen, but that's what I'm saying. 20 years ago, Silicon Valley
100%.
wasn't affordable. It wasn't affordable 10 years ago. It wasn't affordable 5 years ago. Yet the amount
Not
of
affordable now.
yeah, then why does the innovation happen in that area? Because you've got this,
why the
because
innovation happened.
you've got younger people moving in, willing to hustle and struggle, man. Like I still see all of these people coming in from the outside, from New York City, coming to New York City and saying, I'm gonna make it. I'm gonna make it here. I don't care if I have to live in a 1-bedroom basement apartment with cockroaches. That freaking drive, that innovation, that I think that attracts the spirit of people, man. You know, people have this inner drive to struggle sometimes. And I think that's the thing. That's what probably causes a brand new, fresh batch of people coming in, you know. So I don't know. I don't agree with it personally, but I think that if I had to just look and try to rationalize it, like why are all the epicenters of innovation in this country, why are they primarily in states that have high taxes? Massachusetts, with all the like, and the Democrats have controlled Massachusetts forever. Why is it one of the wealthiest states in the country? Why is New York City all of, the wealthiest place in the US? Why is California still one of the wealthiest states in the country? Why is Washington the wealthiest place?
No, Washington just kicked out their two biggest people. First it was Bezos in 23, and now Howard Schultz just said, see ya.
Yeah, but I'm just saying, I'm just trying to understand, like, what attracts all these people to these areas, and why does the innovation happen there? How come low tax Mississippi is at the bottom of the barrel?
Okay. Location, climate. California's got amazing climate. I mean, you can't take that away from it.
The weather is the reason why innovation happens.
Let me ask you something. Would you rather live in Mississippi or California if money wasn't an option?
I'd live in California.
Exactly. Why?
Because it's a freaking great place to live, man. You got great weather.
Exactly. Great weather.
But Seattle, but then you got Seattle, which has shitty weather, and yet why is that? Why is that up there? Weather is not the only thing. There's other institutions.
I get weather's not the only thing, but why is Texas, Tennessee, and Florida magnets for capital now?
Well, they're magnets for capital, not magnets for innovation. That's the key. Right?
Well, I don't know if I would go that far, because
tell me the largest tech company in Florida. Go ahead.
Largest tech company in Florida?
Yeah, innovative tech company, innovative pharmaceutical company in
Palantir, baby.
That's true. Miami is
here, baby.
You got me on that one. That's the only one.
Top 20 biggest company in the US.
There you go. There you go.
They just moved. How funny is it that Colorado's governor found out from a social media tweet? They didn't even get a phone call. Social media tweet.
I wonder if Palantir will close their New York City headquarters and California headquarters. You think they'll do that?
Well, I don't think they have. I mean, their headquarters is in Colorado, and now it's moving to Florida.
Right, but I'm saying their main offices. The main offices that
they're going to close the main offices or not, only because New York, I'm sure they have a lot of clients, so they probably wouldn't close that office. California,
but with Mamdani doing all of the shit that he's doing, why wouldn't Palantir leave New York City? Why wouldn't they close the Gotham headquarters? Why wouldn't they close their DC headquarters? Why wouldn't they close their, not headquarters, office? Why wouldn't they close their
regional?
Why wouldn't they close their Silicon Valley office?
Well, look, but one of the big things is you can move your corporate campus and still have your regional offices. It's all tax structure. But when you move the corporate campuses, you're still taking jobs and wealth away from that state you're moving out of. I mean, look, I'm just going to read you one paragraph of what I wrote. There's so much data in this from the financial side. So Citadel is one of the most profitable hedge funds in the world. They moved their headquarters from Chicago to Miami in 2022. Been building it out aggressively ever since. Elliott Management moved to West Palm Beach. Carl Icahn moved Icahn Enterprises from New York to Sunny Isles Beach. Kathy Wood's ARK Investment Management relocated to St. Petersburg. Goldman Sachs is building a $500
Yeah, and
million
Florida's no longer
campus.
affordable. And Florida,
Hold
Miami is
on.
no longer affordable.
But
There you
check
go.
this out. Check this out.
Yeah.
Goldman Sachs is building a $500 million campus in Dallas designed to house over 5,000 employees. JP Morgan Chase and Wells Fargo both have invested hundreds of millions into massive new campuses in Dallas-Fort Worth area. Wells Fargo is also moving its wealth management division from San Francisco to West Palm Beach. The NYSE Texas, a reincorporation of the 143-year-old Chicago Stock Exchange, officially launched in Dallas in early 25. The Texas Stock Exchange, which is a brand new national securities exchange, backed by over $160 million from BlackRock, Citadel, and Charles Schwab, is set to begin trading later this year. The NASDAQ has also expanded its Texas presence. When you have that level of financial infrastructure being built in a single metro area, that's not a trend. It's an ecosystem being constructed from scratch to compete directly with New York. I mean, that's the problem right now.
Yeah,
Goldman Sachs could have bought another building in New York. JP Morgan
but
could have done more in New York.
If you're the average person on the street and you're having a tough time affording your rent in New York City, the last thing in your brain is, man, I wish Goldman Sachs would build their headquarters in New York City and hire all these people.
With that. When Goldman Sachs puts up a $500 million campus for 5,000 employees, okay, that's 5,000 employees that need lunch. That's 5,000 employees traveling to and from. That's 5,000 employees that are shopping during the day and spending money. That is a lot of electricians, plumbers, elevator operators. That's
I'm in agreement.
That has to service that.
Stephen,
we want more businesses in New York. We want more corporate campuses in New York because it helps the macroeconomic environment.
Stephen, I'm in agreement with you. I'm looking at this, like if I'm looking at this from the lens of a capitalist, right? Yes, I absolutely agree. Like New York City should try to attract the most capital possible. But if I'm looking at this from a 22-year-old with a bunch of student loan debt, I can't find a job, I'm having trouble with paying my rent, the last thing I'm saying is, man, I wish Goldman Sachs would hire 5,000 more people here competing against me for rent, right? I want 5,000 people here, on the train with me. I want 5,000 more people, on the LIE with the traffic the way it is.
Listen, from the aspect of the LIE and competing, yeah, when you have these companies come in, there's more competition, but not everybody can live in Manhattan. I can afford to live in Manhattan. I don't.
Right, but you've made that choice. What if I want to live in Manhattan, but I've
been
priced out
what people want and what they should do are two different things.
Yeah, but that's exactly the point, that people vote with what they want, right? So they want no traffic on the LIE. They want to afford to live in Manhattan. They want to live in Manhattan. They want an affordable home in Park Slope. They want to
win the lotto. It's not going to happen.
Right. But the thing is, if there's enough people at the bottom who want the same thing, then you get a mamdami.
Look, there is a very big problem with financial literacy. There's a big problem with economics, understanding economics. There's a big problem with allowing people to go to college and rack up hundreds of thousands of dollars in student debt without a way to being able to pay that back and let it cripple them for 20 years. There's very big problems with a lot of these things, but we need to be, as a state, New York needs to be more competitive, because now Texas, Florida, Tennessee, these states are being ultra competitive and they are getting businesses to move there.
Do you know
what more businesses here?
Do you know what the average person at the bottom is going to say to something like this? They're going to say, who cares? Let them go. Let them move.
I get that. But there's more people in the middle class that this is going to affect than people at the bottom.
What middle class, bro? New York City has been hollowed out. The middle class has been hollowed out.
You would
New York City. New York City.
Data, if you look at the data that I put together for California and Texas, because of what Newsom said about taxes, I think you should read that post. I really think you should. It is very interesting. So a lot of people got on Newsom, and he trapped everybody. I can't believe people fell for it. He made two statements. One of them was technically correct. One of them was false. The technically correct one is that the lower end residents of Texas pay more in tax on a percentage basis than the top 1% in California. And everybody's like, no, that can't be, that can't be, that can't be. There's no state tax. He wasn't talking about state tax. He was talking about the effective tax rate. And he was citing, I can tell you exactly what he was citing. But it's very interesting. But when you look at the data, technically he was correct. He goes by a snapshot in time and doesn't give an entire picture of it. Hold on.
All I know is in a healthy economy, you've got capital that has to flow. And the thing is, sometimes if you create too much capitalism, and I know this is going to sound bad, but when you create too much capitalism, you get income inequality. And if you don't solve for income inequality,
there's no other system that works.
What, income inequality? Unfettered income inequality?
No. Capitalism versus socialism or communism.
No, I totally agree with you. I think capitalism is the best thing in the world, but at some point, you also need to realize that income inequality, unfettered income inequality, only leads to feudalism. Whether that be, and I call that probably neo-feudalism, where you've got a set class of people who own everything and a set class of people who have to work their entire life in order to basically scrape by, right? So New York City, if you think about it, that is what New York City is becoming, right? You've got a class of wealthy people that basically live the high life. They own everything. They have everything handed to them. And you just got a bunch of serfs at the bottom who basically live to pay the rent, right?
Look, one of the things, you could make a more fair tax code.
Well, isn't that what the Democrats are saying? That they want to raise taxes on the wealthy to make it more fair?
That's not a more fair tax code. You can make a more fair tax code that works for everybody. And
so what would you change? What would you change?
So I need to go back and run the numbers again. I am a big proponent of the flat tax. I am a huge proponent of a 19 to 21% flat tax across the board, no deductions. And the numbers may have changed because the last time I ran them was probably 2 years ago when I wrote out a new tax plan. But if you go off of how much income is generated on a personal level and on a corporate level, if I remember correctly, it was about 19.5% income on personal and 22% for corporate to have a surplus every year based on what the federal budget was. And my whole thing is we all use the same roads, all same lights, all same fire, all same police. We all get one vote for elected office. Have the same damn tax rate and do not allow any loopholes. If you make 100, if it's 19.5%, and you make $100 million, you pay $19.5 million. There's no deductions. If you want to donate, you want to do whatever, there's no deductions. There's no way around it. The tax code is too complex, and there's too many loopholes to shelter capital. So if you really want to fix the system, it's not called raising taxes on the top 1% because they're just going to leave and you're going to lose that tax revenue. It's making a system that works for everybody.
I don't know, man. I think there's a lot of things to think about. Mamdani 2025, baby. Let's go. One day when all these rich old boomers sell their homes for pennies on the dollar in New York City, I'll be able to live there again. I'll just buy in and I'll wait until Mamdani leaves. The city will go to shit and then I'll start a renewing cycle, right? That's what happens. Urban renewal. You have all the wealth leave, then you've got all the shit. And then people build up all the shit again. And there you go. You've got a next generation of... that's the way I see this. I think New York City eventually will succumb to the communists. It will get hollowed out. But then a new generation of capitalists will come in and rebuild everything. It happened in the past and it'll happen again.
So I want to. Normally, I won't answer this stuff, but I do want to answer this. Steve, is this fair? Top U.S. billionaires such as Elon Musk, Jeff Bezos, and Mark Zuckerberg hold wealth surpassing the combined net worth of the bottom half of U.S. society, over 165 million people. Yeah, it's fair. You want to know why it's fair? Because they created three of the best businesses in society. Think about the amount of direct and indirect jobs that they have created. If they didn't build those businesses, the amount of people that would have not prospered from their labor and what they built would be completely regressive to the nation and the world.
That's okay. Let's dissect that. You've had experiences where you've had trust busting and it worked out well for this country. What happened to that? Standard Oil was the largest company on the planet at one point. It got broken up. Ma Bell got broken up. You had a what is that thing called? You had Vanderbilt. That whole thing got broken up. So what's the argument for keeping a whole bunch of trust around?
That wasn't the question. They said, is it fair that they have all that wealth? What I'm saying is they created a tremendous amount of prosperity to society. If you didn't have that incentive to create, that prosperity would have never been there.
Yeah, but the thing is, if the only people that have all the money and they have all the power to run business, and you have to compete against a Jeff Bezos, what makes you think you could ever compete against Amazon? Wouldn't you just be
What makes
like
you think you could ever
if
compete
you
against Amazon? Why would you ever try to compete against Amazon? Without Amazon, the small businesses wouldn't be able to thrive. They wouldn't have access
say that
to.
again? Say that again. Without Amazon, small businesses wouldn't
Think
be
about
able to
this.
thrive.
You have a small business, okay?
Hmm.
You're set up in a local community. With an Amazon marketplace, you now have access to the entire country that you can sell your goods at. E-commerce through Amazon has expanded opportunity for small business across the board. It has made small business thrive.
Hmm.
It is a net plus to society, not a net minus.
Are you sure about that? I mean, what did
100%.
we do before? What did we
100%.
do before What did we do before Amazon came along? You don't think this country was great before Amazon? Like we didn't make the local retail mom and pop shops work?
What I'm saying is that small businesses have access to a much larger audience to sell their goods. I
Yeah,
can't
but if
believe
you're
you're even going down this road.
I'm just fucking with you at this
I
point,
know
man.
you are. Like,
The
I
chat
can't believe
hates
you're
me
going down
right
this
now.
road.
The chat hates me right now, but all I'm doing is just being confrontational to be confrontational. I
I
don't
know
believe in
you
half the I don't believe in
Like,
99%
here's the
of the
thing.
horse shit
Kris
that I
doesn't
just said.
believe a single thing he said for the past 30 minutes.
But I wanted to test
Not a single
Steven's
thing.
patience. I think Amazon's a net positive for
Of
the
course it
country.
is.
But I'm trying to make the argument that the other side routinely makes to see what kind of challenge that you would come against it, right? So one of the challenges is like, oh, look, like all these mom and pop retail businesses, they all closed because Amazon, no one's buying stuff there anymore. So now people are, what are people doing? Not everyone can do drop shipping, right? Not everyone can do that. So
I mean, look at Michelle. Her business thrives because of her social media. She gets a
right,
ton of customers from that. That's a
right.
perfect example of small business utilizing a product that is built by the billionaire. I mean, it is crazy to think that we're in a place where we want to confiscate and hurt innovation. It's just crazy.
Mhm.
It's
Yeah, I mean,
absolutely crazy.
the way I see it is that I miss my local DVD store back in the day in the 90s. The way I see it is that the economy is always evolving, and the real entrepreneurs, they figure out how to work new systems into their business. And because they work that new system into their business, they're able to thrive. Let's say I own a pizza store in somewhere here in Atlanta, right? And I'm like, oh, you know what? I'm just going to hire my own delivery driver and I'm going to basically, just do things the standard way. I don't bother trying to do Uber. I don't, try not to do DoorDash. That limits my pool significantly, right? So the most innovative businesses, what are they going to do? They're going to go that route. They're going to say, hey, I'm going to accept Uber. I'm going to accept this. I'm going to do that. So
Kris,
there are.
We have breaking news, everybody. We have breaking news.
What's the breaking news?
The United States Securities and Exchange Commission is preparing a proposal to eliminate the requirement to report earnings quarterly. And
I saw that earlier today.
And instead give companies the option to share results twice a year. The proposal expected to be published as soon as next month. Do not let this happen. As investors, we need quarterly updates, not biannual. That would be so dumb.
I agree. Why even have reporting structure? Why even report? Why don't we just get trust? Just trust us.
Yeah.
Fuck it.
We
just
got
be easier then.
The whole reason that we have quarterly reports is because of the whole just trust us, bro bullshit.
Yeah.
That's
this
the
whole thing, like
this reporting structure.
Some of the people in like Twitter, like I had made the same thing that you said, and some of the people said, oh no, this will just make things more efficient because the businesses can focus on long term and they don't have to keep reporting short term. And I'm like, okay, then why even report? Fuck it, do once every 5 years. You know, that's the most efficient way to do it. Screw it. Why even report? Just trust us. We're doing good. Don't worry about it. We're good. Like, no, more transparency. Do you know how many companies are found out to be fucking frauds?
It's called
Enron, they report
WorldCon. I mean, what do you think is going to happen? This is not good. There's not a single good thing about this other than Zuckerberg doesn't have to get on a microphone 4 times a year.
Nah, fuck that. I want his ass on. Shit, they should do 6 times. I want Zuckerberg on there as many times as possible, every 2 months.
I mean,
I want, as an investor, I want to hold management to the fire. Sure.
If you're going to do that, the trade-off should be real-time cash flow statements. Yeah, every day.
100%.
Every day. You
100%.
want to do that? Shareholders should have access through a portal of the cash flow statements.
Bro, I'm glad someone said Gap is already scam. No, Gap, you're thinking of non-Gap. Adjusted, non-Gap. There's so many games. Some of these guys, they play all these games. No, screw that nonsense, bro. I want that shit to be as frequent as possible because this way I can audit the shit out of these companies and understand what I'm investing in, right? The more time you give them, the more likely it is that they can fuck shit up and do things based on their timeline. No, I don't want that. I want them to report as frequently as humanly possible. So as an investor, I understand what I'm getting myself into. Oh my God, the management has to take time out of their daily lives to actually tell investors what the hell is going on. No, yes, I want that. Screw that bullshit. When has more information ever been bad?
They work for us. Remember that.
Yeah.
As shareholders, they work for us.
Yeah.
Now, regardless of the fact that we own basically none of the company, we're still owners in the company. They have a fiduciary responsibility to report the numbers to us and let us know about the numbers for our investment.
Yes, absolutely.
This has nothing to do with covering companies on Seeking Alpha for me or anything like that. Like, if I stop doing all that stuff, it doesn't matter. This is bad for investors. 100%.
Yeah.
Oh my God.
Whatever. All right, man. I think that's it. We went out almost 2.5 hours. So listen, all this shit, everyone in the comment section, I am not a communist. Okay. I believe in capitalism. Okay.
He's wearing a
South Carolina hat.
Yeah.
Yeah. I mean, to some degree, I would say that we need to work on getting the income inequality piece of things corrected in this country. I mean, when you have too much income inequality, you're begging for socialism to come in, right? That's one of the challenges that you run into, is that eventually the bottom half will rise up and eat the rich, and it's going to be done at gunpoint. So you don't want to ever get to the point where the bottom, 75, not even 70, bottom 80% of the population is like, we need to kill the top 20 and eat them and basically take everything that they have. And unfortunately, in New York City, that's exactly what's happening. You've got a strata of wealth in New York City that's just unimaginable. And then you've got everyone else that's literally struggling to survive. And one of the reasons why we have a Mamdani in the first place is because the city did not take the proactive actions to make sure that the middle class was being, taken care of.
Well,
so,
let's call a spade a spade. He campaigned on something completely different than what he's doing also.
yeah.
What he said in his campaign is night and day from what he is doing right now. So, did you hear this? They want to reduce the speeds in New York City to 20 miles an hour across the city. And they want to give tickets with the speed limit cameras if you go 1 mile over.
Jeez.
It's so bad.
They should just ban cars in New York City at that point. Shit.
Fuck that.
We'll see what happens, man. All right. I'm out of here.
All right. Thank you for being here, everybody. We truly appreciate it. And I will be on tomorrow for a Technical Tuesday. I'm taking over for Amit on that one. Kris will probably be on, I think, tomorrow night with Matt for Cash Flow Chronicles, maybe.
Maybe Wednesday, because me and Matt have to figure out a different time. Yep.
Okay. All right, everyone. Thank you very much. We appreciate it. Have a great night. Tommy
Take care.
Tell us what the horses are. Drop it in Twitter. Have a good night, everyone.
Later.